first, this is something that someone asked me the other day, and I thought it was pretty interesting that I couldn't easily find an answer, and that's how could I estimate what is a typical slippage for a particular asset? What should I expect? So it was funny. You can sort of get anecdotal information online as to what is the slippage you can expect for a particular asset, but you sort of need access to you call a definitive list anywhere. Do you have anything like that?
I mean, it depends on the time of day, what's going on in the market. But I think the best way to estimate it would be to do some real orders with small size and see what the slippage is.
Right, exactly.
That's
Yeah, you
really
have to
the
look
only
back
way
on
to
that.
do it. I don't know. I'm not aware of any data providers that would kind of give you that information. I don't even know. There's no way to I don't even know how you would collect that data anyways.
What I was looking to how to do that, some people were saying, well, just take on platforms that provide you with a bid ask, just track what the bid ask spread is, and then use that as an indicator. Other people say, well,
Yeah.
just use ATR, and ATR will give you an idea of the range there. But then those don't take into consideration, like you're saying, volatility events or things like that. So you're like, okay, my typical slippage is like this, but then maybe I'm getting really wrecked on something else.
I think I would say also, like, generally, if you're getting to the point where you're like micro optimizing slippage, you're probably on too low of a time frame. That would be my personal opinion. If it's really that much of a factor for your strategy and the slippage is messing you up, you need to move up in time frame. That would be my kind of generic answer.
Yeah, I'm trying to remember when I first started trading. I remember I had this sense that the lower the time frame I'm on, and the faster I do the trades, the more money I can make. I don't know how that got into my head or how that left. But the opposite is completely true. You make more money on
Yeah.
the longer time frames. There's no
Yeah.
trend on the
I
1
think that's,
second.
what's the stat? It's like something like 90% of the movement for stocks happens overnight. Like,
Right.
it's crazy. Like, the stock relatively does not move during the day, and most of it happens overnight. So if you trade higher time frames and you're in the trade longer, you can capture more of a move, and then the slippage is basically irrelevant at that point. But I get why people don't want to do that, because they don't like holding overnight, and people just, they're scared, but I think the best choice is personally to be out in the trade longer. There's more meat on the bone. You have enough profit to pay for the slippage, enough money to pay for the commissions, all of that. And even after paying everything else, you've got enough left for yourself.
That's right, exactly. I run a VWAP strategy myself, which, my God, I'm so happy that Mike introduced me to it. But I'm even trading. I need the trend from yesterday, and I'm trading over a 7-day period. And there's nothing. I enjoy that feeling, John, of waking up in the morning and looking at my phone and figuring out, hey, did I get stopped out or not? I like that, because if I'm sitting in front of my computer watching it, I'm going to screw myself out of these trades 9 times out of 10. Doesn't matter how automated it is.
And I trade with the R system. So, like, I always have the same amount of money risked. So my stop loss is always at a point where I'm going to lose 1 R.
Right.
And I might risk 1, 2, or 3 R, but it makes it a lot easier, in my opinion, because you always know what your risk is. So, like, you're either going to win or lose the trade. And if you lose, you know exactly what you're going to lose. And it's not that big of a deal. It's just an R, and as long as your win rate is, you could lose half your trades. If you're 2-to-1 risk to reward ratio, you can still make money having lost half your trades.
That's right.
So
and I do
that's
3 to 4 R's, so I can lose a lot in a row.
Yeah.